Good day everyone. So today we are going to talk about what is interim financial report. And yan ang mag-prepare ang mga company aning mag-prepare ang mga company o mga interim financial report. So now the question is unsa man ang applicable accounting standard when we are talking about interim financial reporting. So naa ba kaha? Well, of course, naa jud, which is the PIS 34 or the Philippine Accounting Standard 34 title as interim financial reporting. So now, before para mas mahibaw-an nato kung unsa jud ni ang financial reporting is need to define it para ma-explain nato tarong ug ma makaibaw gyud ta og unsa jud ni siya. So, as to define interim financial reporting, interim financial reporting means the preparation and presentation of financial statements for a period of less than 1 year. As you can see, the highlighted word is less than 1 year. Well, makabantay ta or mas naanad ta nga ang pag-prepare of financial statement labi na yun sa atong basic accounting na kaning ang pag-prepare of financial statement is 1 year duration siya. Like naanad na ta ba or nakabantay na ta nga 1 year duration yun na siya, and makapili pa ganita either calendar period which is starts from January to December and or fiscal period which is starts from any months but end up in basta one year duration. However, sa PIS 34 interim financial reporting is less than 1 year na siya. When we say less than 1 year, so pwede na quarterly, monthly, and semi-annual. And as you can see in the screen niya, quarterly is the most common. So now kay na-define naman nato kung unsa ning interim financial reporting ato sing hibaw-on kung ngano mag-prepare jud ang company ani og kining quarterly report, monthly report, or semi-annual report. So, unsa may kalahian ani niya sa annual? Again, the usefulness of decision making. Ka-remember mo sa discussion nato sa conceptual framework yan, anything sa pag-prepare of financial statement or pag-prepare of financial report is will help into decision making. Mao bitang gibuhat og less than 1 year kay para ang mga users sa financial statement, particularly katong primary users is can make a sound economic decisions. So mo na siya, like makita na nila dayon bitaw ang financial performance sa company within in quarter pa lang, month pa lang. Kaya diba kani mga primary users is they are the one who provide the capital. Normally, mga shareholder, mga investor, mga lenders. So, of course, na po sa other users nga dili man directly nga nakakontribute but na-impact like sa mga customer, supplier, etc. So that is the purpose og nganong ang mga companies magbuhat og interim financial report. Kay kailangan nilang maka-decide dayon o kailangan magamit nila dayon ang information ani para makabuhat og for example improvements. And ma-decide if unsa man ni i-continue pa ba ni nga segment or kaning project nato nga based sa performance sa 3 months is lugi jud. So mao na purpose nganong ang mga company og interim financial report. Pakapangutan na mo nga mandate or required ba gyud nga standard. Well, according to PIS 34, we does not mandate which entities are required to publish interim financial reports, how frequently or how soon after the end of an interim period. So mao na giingon sa standard nga dili required or dili mandatory ang pag-prepare og kinsa man nga mga entity nga mag-prepare og interim financial report. Like wala bitay giingon nga kaning kinsa nga mga entity nga required na mag-publish og interim financial report. However, in the Philippines, of course, na ay mga Security Exchange Commission and the PSE, which is the Philippine Established Exchange. So, we all know nga ang mga nakaregister under PSA is kanay mga public entity or mga public listed entity with public accountability, which means naibdaghang mga company or mga tao nga nag-invest ana nga nag-invest ana. That is why under the SEC and PSA is required entities covered by the reportorial requirements. So kinahanglan sila mo buhat og interim report. Lagi just what I said earlier nga kaning gibuhat ang interim financial report kay lagi para mahibaw-an sa mga lenders, mga investor o mga shareholder ang financial performance sa company. And at what it said na within 45 days after the end of the first 3 quarters. So mao ni ang mga company nga naa yung reportorial requirements na mandated sa SEC and PSA kay tungod sa ilang katong ingon nga daghang mga investor or shareholders sa ilahang company.
So these are the two views on interim financial reporting, the integral view and the independent view. So integral view means annual operating expenses, meaning ang mga selling o mga administrative expenses kay gina-estimate. So actually, before mag-start og bag-o na kanang accounting period or operation sa business, kay nag-budget na nakaanadaan kay ang company is required jud na mag-budget. So for the budgeting is the annual budgeting for operating expenses katong selling o administrative expenses kay allocate daw on an interim period. For example, kay quarterly. So i-allocate for that quarter and for this quarter and then for the next quarter based on the forecasted revenue or sales volume. Kaya ang mga selling expenses is directly na naka-attribute na sa revenue or sa forecasted revenue. Kaya again, ang mga company kay nag-budget na sila daan from revenue or sales down to expenses. So i-allocate na lang daw, kumbaga gi-match na lang kung asa ato ang mo-fit. So kung walay expenses, walay revenue, mao na siya ang allocation. So for the independent views is no estimations and no allocations are made for interim purposes. Kabaliktaran siya sa integral view. Kaya wala siya estimation na gibuhat sa annual operating expenses. And then annual operating expenses are recognized in the interim period in which they are incurred, meaning kung pila gyud ang actual expenses for that period or for example for that quarter, mauna dyan na siya ang appear sa interim financial report. Dili pareha sa integral view na gina-estimate. So para masabdan gyud kay ang integral view kay gina-estimate ang operating expenses and i-allocate for that quarter. And then ang independent view kay no estimations and no allocation are made. So kung pila gyud ang actual expenses ana na quarter kay mao na dyan na siya mo appear sa interim financial report. So next is financial statements to prepare for PAS 34 when it comes to interim financial report. So it says here in PAS 34, it allows an entity, so ang business daw, to publish a set of condensed financial statements or complete sets of financial statements in the interim financial report. So kung mag-prepare daw mo og interim financial report, pwede ra mo mopili og condensed financial report lang, dili ra ang complete set. So ang mga complete set kay katong mga preparation of statement of financial position, statement of comprehensive income, statement of changes in owner's equity, cash flow, and notes to financial statement. So if mogamit ka og kanang complete set, dapat naa to sila. So if condensed financial statement is when it comes to the notes selected ra siya for interim financial report. So mamili ra mo aning mga nasa ubos. Ang condensed statement of the financial position or balance sheet, condensed statement of comprehensive income, condensed statement of changes in owner's equity, condensed statement of cash flow, and selected explanatory notes. So kanang mga selected ra kay mga relevant information to be used sa decision making sa mogamit for the interim financial report. So dili ni siya mga complete set pero naka-condensed financial statements lang.
Disclosure or compliance with PFRS or Philippine Financial Reporting Standards. PAS 34 provides that if an interim financial report is a compliance with PFRS, such facts shall be disclosed. Examples of disclosures required in a condensed interim financial report is include first, a write-down of inventories to net realizable value and the reversal of such write-down. Example, ang company na maligya sila og case phone, and then ang new model sa phone is dili sa igo sa case na ilang gibaligya. So instead of amount na 25 pesos for the case, they put 15 pesos for that, so the realizable net is 10. The company only had a few of that particular model. Next is B, recognition of a loss from the impairment of PPE, an intangible asset, and the reversal of impairment loss. Next, C, the reversal of any provisions for the cost of restructuring. Restructuring charge can occur for a variety of reasons. These include when a company makes an first acquisition, sells a subsidiary, downsizes, implement of new technology, relocates assets, decreases or consolidate debts, diversifies into a new market, and writes off. Next, D, the acquisition and disposal of items of PPE. The disposal of PPE is the strategic decision to sell, abandon, or otherwise remove an asset. Next, A, commitments for the purchase of PPE. Example, suppose a bakery commits to buy a 500 sacks of flour each month for the next 12 months. So that's purchase commitments, because the bakery is obligated to buy a certain quantity of flour at a specific price. Next, SF litigation settlements. What are claims and litigations? A claim is a set of operative facts creating a right enforceable in court. Next is G, corrections of prior period error, previously reported financial data. So in this, we're talking about errors affecting both income statement and balance sheet. So if it's just easy if the error is just only in income statement and only in the balance sheet also, because we're just going to classify. So like the example is, for example, you debit the rent expense instead of interest expense. So just cancel the rent expense and then debit the right account, which is interest expense. So in the balance sheet it's the same. So if the credit is accounts payable, and then you credit the salaries payable, so just cancel the salaries payable, then debit, and then credit the right accounts, which is the accounts payable. But here, errors affecting both income statement and balance sheet. So we have two types of error. That first, the counterbalancing errors. The counterbalancing errors when not detected within subsequently year, in which errors uncommitted are automatically corrected. So in the word counterbalance, it's ang error dili siya ma-detect sa prior period and ay subsequent, correct lang yapon siya by itself because automatically corrected. So example of the counterbalancing error is the misstatement of inventories, purchase cut-off, and sales cut-off. Is mauto siyang problema nga inyong makita nga sa inyong inventories is understate or ang inyong end of inventories overstate. Purchase cut-off, understate. Sales cut-off, understate. So the next error is the non-counterbalancing errors. Errors when not detected are not automatically in the next reporting period. For example, purchases understate. Let's just put your purchase is your expense. Expense is inverse to net income. So that's in the year 1. So net income is mataas siya. In the year 2, ang net income nimo is mao siya. Such main reason is the cash basis. Cash basis. Because the purchase account in year 1, bayaran siya in year 2. Record siya in year 1. So, ang imong expenses mataas. So, that's why ang imong net income is mobos. So, in the main earnings end of year 2, so, no error or because na-offset na nato siya. So, that's what we call offsetting. Next, H. Any debt default or any breach of a debt covenant that has not been corrected subsequently. Debt covenant is a provisional clause in a loan or debt agreement that specifies certain actions. Lastly is the related party transaction. So just saying with the last group of reported sample, the parent company control the subsidiary company or has power to direct. So parent company and subsidiary are related parties. So,
Hi everyone, so my topic is all about the basic principles. So according to PAS 34 or PAS 34, it provides that an entity shall apply the same accounting policies. So if unsa ang imong ginagamit kung na-prepare ka og annual, so same sad ang gamiton kong interim. So measurement for the interim reporting prepare shall be made on a year-to-date basis. So next is revenues. So revenues for products sold or services rendered are generally recognized for interim reports. On the same basis as for the annual period, same goes with the cost and expense in number 3. So we already know naman no kung unsa jud ang cost and expense. So next basic principles is the preparation of interim financial reports generally requires a greater use of estimation than annual financial report. So that's true no kay di ba natay gitawag og accounting estimate no. So if magprepare ta by the use of interim, mas sayon ang estimation na atong gamiton compare sa annual which is the 1 year. So, unsa pa jud in terms of inventories. So, inventories are measured for interim. So, the same principle, the lower of cost or net realizable value. So, walay kausaban ana nga part. Next is dividend revenue. So, pag naka-receive ta og dividend or revenue, gikan sa lain na corporation, or royalties and government grants shall be recognized in interim period when they occur. So, kung i-recognize ni nato siya, dapat nag-occur ni sa interim period. Dili siya i-forecast kay fixed amount man ang dividend ug ang royalties. Next is depreciation and amortization. So, sa kanina principle, gamito ni nato for property, plant, and equipment, and also for investment property. Well, for the amortization, this is all about intangible assets. So, shall be based only on assets owned during that interim period. Last is income tax. So, in interim period, income tax expenses shall reflect the same general principles of income tax accounting applicable to annual reporting. So, sa kaninga part is all about past 12. So, i-compute lang nato kung pila ang na-incur sa current and deferred SAD. But, dita kayo makarelate ani kay pang intermediate accounting man ni siya. So, kaninga topic is pang second year, but same concept applied. So, next is the example of income tax. So, an entity has the following income before tax and annual effective tax rate for the first 3 quarters of current year. So, this example is pertaining to income tax. So, here is our illustration. So, first to third quarter. So, makita na to diri ang total income tax, income before tax, and rate or tax rate. So, for the first quarter, naatay 30%. For the second quarter, nasa tay 30%. And for the third quarter is 25%. So, example lang ni ha. So, makita diri sa illustration. So, pila man ang income tax ani na quarter. So, for the first quarter, 30 times 5 million is equivalent to 1.5 million. For the second quarter, 30% times 6 million is equivalent to 1.8 million. And then, itotal na nato siya, makakuha ta og 3.3 million for the 2 quarters. And then, next is we come up with cumulative income tax for 3 quarters. So, 25% times 19 million is equivalent to 4.750 million. And then, we subtract the 3.3 million from 4.750 million. We come up with 1.450 million, which is the income tax expense for the third quarter. So, mo na siya guys ang example na mo sa income tax